Hi everybody, Dana Sparks, broker of Maximum One Greater Atlanta Realtors, and continuing on with the 2018 changes to the Georgia Association of Realtor contract forms. Today's topic has to do with changes to the Financing Contingency Exhibits. So there has been one change that is universal in the conventional Financing Contingency Exhibit, FHA Financing Contingency Exhibit, and the VA loan contingency exhibit. So let's talk about that. And then I want to talk about a couple of changes in those other forms. So basically what had been in the GAR contracts prior to this year, in the conventional exhibit, the FHA exhibit, and the FHA and VA loan exhibit, there had been a paragraph that had right of seller to request evidence of buyer's ability to close. So let me read it to you and then I'll explain it to you. So basically, and again, this has been in existence in 2017. The paragraph reads, if the financing contingency ends without a buyer terminating the agreement, then the seller shall have the right, but not the obligation, to request that the buyer provide the seller with written evidence of the buyer's financial ability to purchase the property. A copy of a loan commitment from each institutional mortgage lender from whom the buyer is seeking mortgage financing to purchase the property, stating the type, amount and terms of the loans, and the conditions for funding the loan shall be deemed sufficient evidence. The provision of such evidence is not a guarantee that the mortgage loans will be funded and that the buyer will actually close on the purchase of the property. The buyer shall have 7 days from the date the seller delivers notice to the buyer requesting such evidence to produce the same. No request for such evidence shall be made by the seller less than 7 days from the date of closing. So again, that paragraph has been in the financing contingency forms. And basically it says, okay, we're past financing contingency time frame. Buyer didn't terminate. So now the seller says, hey, look, you didn't terminate on financing. Therefore, I'm assuming you are going to get finance. I want proof of that. I want evidence that the lender is going to lend you the money to purchase this house. That evidence, basically what you're looking for, is a loan commitment letter with those conditions, whatever the final conditions are. Again, this loan commitment letter is not an end-all be-all that it's going to close. We all know things happen, and regardless, it's never a done deal until the ink is dry at the closing table. Actually, until the checks are cleared, then it's a done deal, because it does have to be funded. But nevertheless, this paragraph has been in there. So what if, so the seller, you're past financing contingency time frame, and the seller sends this notice requesting evidence of buyer's ability to close, and the buyer doesn't provide it. They don't get the loan commitment letter from the lender and send it to the seller. Then what? Nothing. GAR has left us hanging for a while. You listing agents, unfortunately, you were put in a really bad position because GAR had this right for the seller to ask for that evidence, but there were no consequences to lack of performance. There were no consequences if the buyer didn't provide this information from the lender. So the sellers were coming to you, the listing agent, saying, well, hey, I want to terminate. Well, you can't terminate. There's no termination rights. There's no provisions. There's no anything. Well, thank you, Georgia Association of Realtors. This year, finally, you have added some consequences to that provision. So again, in the financing contingency exhibits, brand new this year is the paragraph that follows that paragraph. So that paragraph is right of seller to request evidence of buyer's ability to close. And now, thank you, GAR, you have added seller's right to terminate. So let me read that to you. In the event the buyer fails to provide the seller with the evidence of the buyer's ability to close within the time frame set forth above, which is the paragraph I just read, the seller shall then notify the buyer of the default and give the buyer 3 days from the date of delivery of the notice to cure the same. If the buyer does not timely cure the default, then the seller may terminate this agreement within 7 days thereafter due to the buyer's default upon notice to the buyer. In the event the seller does not terminate this agreement within that time frame, the right to terminate on this basis shall be waived. So now GAR has given contractual consequences if the seller past financing contingency time frame, seller must first send the notice requesting evidence of buyer's ability to close. And you guys, before I go any further, agents, y'all stop emailing each other when the contract asks for notice. Stop doing it email to email. You guys are not the essential parties to the contract. When the contract talks about specific notice from the seller to the buyer, you guys use the notice form. In GAR, it's F-135, notice. Make sure you use that form. And basically what you're going to do is you're going to fill out the notice form and you're going to put per paragraph 7 of Conventional Loan Contingency Exhibit A, seller hereby requests evidence of buyer's ability to close the loan. Have the seller sign the notice form. That's the proper way to send notices. Use the form and have the buyers and the sellers sign whatever the notice is. So anyway, back to the thing. So financing contingency time frame is passed. Seller fills out that notice form asking, requesting evidence of the buyer's ability to close. In other words, the loan commitment letter with the conditions. And then if the seller doesn't, the buyer has, the buyer then has 7 days to deliver that loan commitment letter. If the buyer doesn't deliver that loan commitment letter, then the buyer is now in default of the contract. In default, then the seller sends a notice they're in default. Buyer has 3 days to cure, and after that, if the buyer doesn't cure, in other words, if the buyer doesn't send that loan commitment letter, then the seller now may terminate. The seller then has 7 days thereafter to terminate. If they don't terminate, you just go through with it. So again, there are some consequences. Now, a thing for you agents, y'all have to be careful of your time frames, because let's think about it. Typically, what is your financing contingency time frame? You have to take into account the length of time for your financing contingency time frame and your closing date. So for example, let's just say your financing contingency time frame is, let's just say you put in there 21 days from binding agreement date, and your closing date is 30 days from binding agreement date. So this request for evidence doesn't occur until after the end of the financing contingency time frame and the buyer hasn't terminated. So now you're on day 22. Seller requests evidence of buyer's financial ability to close the loan. Buyer then has 7 days. So you're on day 22 is when they send it. Then you've got 23, 24, 25, 26, 27, 28. We're on day 29. Then you don't get it. Send notice we don't get it. Buyer now has 3 days to cure. Day 30, 31, day 32. And then the seller has 7 days to terminate. 33, 34, 35, 36, 37, 38, 39. We're at day 39 from binding agreement date, and we're past the closing date. So that's just something time frame wise for you guys as agents to pay attention to. So wonderful that we finally now have some consequences for lack of performance if the seller requests this evidence of the buyer's ability to close. But again, be careful of your time frames because of the time frame for this to all occur, including notices sent and time frames to cure default, and then time frames for termination. So you have to pay attention to financing contingency time frame and closing days. But anyway, really like that addition. I think that really tries to even things out with moving forward with the loan contingency. You lenders or you buyer's agents, you have to be really make sure that your lenders are aware of this. Please check out another video I did, and I'll put the link below, on new forms 2018, new and revised forms that impact the lender. This is definitely a revision or an addition that will also impact your lender, because you really don't want your lenders putting your buyers in default of the contract if you can't get that loan commitment letter when so requested. So definitely need to pay attention to that and make sure your lenders are aware of that and that you can get that loan commitment letter. The other thing that GAR has done in the financing exhibits, if they have finally labeled all the paragraphs. So for example, let's just say, for example, in the FHA loan contingency exhibit, where it talked about the FHA upfront fee, it would just have a paragraph number and then just launch into the actual verbiage. Now all of the paragraphs now have a title. So for example, this one is called mortgage insurance premium, and then it launches into the same verbiage. So that's really, it just labels all the paragraphs. Change in the VA loan contingency exhibit. Again, it adds that same paragraph. Paragraph 8, seller's right to terminate based on not receiving that evidence of buyer's ability to close when so requested. And the other thing that they changed, 2 other changes they made to the VA loan exhibit. The VA loan exhibit contingency is F65. Under paragraph 14, where it talks about certain fees paid by the seller, it says, notwithstanding any provision to the contrary contained in this agreement or in any exhibit attached hereto, seller shall pay all of the following amounts to the extent the same are charged as part of this transaction, even if they exceed the seller's contributions at closing. So this year in 2018, GAR added that phrase, even if they exceed the seller's contribution of closing. Then that's paragraph 14, and then it has paragraph A and subparagraph A and B. And paragraph A itemizes a whole litany of issues that the seller, things that may be required as part of the VA loan that the VA borrower is not allowed to pay for, that the seller must pay for. For example, termite letter, loan closing or settlement fees, document preparation fees, preparing loan papers or conveyance fees, attorney services other than title work, photographs, interest rates, so forth and so on. There's a whole litany of items itemized out there that the seller is required to pay on a VA insured loan. The next subparagraph B says, any other fees, costs, and charges which are not permitted or allowed by the VA to be paid by the buyer. Then GAR has another subparagraph under there that has in parentheses. It says the above reference costs, and there's a checkbox, are or are not included in the items paid by the seller at closing, subsection of the closing cost paragraph that seller may have agreed to pay in accordance with the seller's contribution at closing. So it gets a little bit confusing because of that term that they added. So again, paragraph 14 has certain fees paid by the seller, and it says basically, seller, you have to pay these fees on behalf of a VA borrower. The new phrase is, even if they exceed seller's contribution at closing. Then they list what all the fees could be, and then they, in case they forgot something, they said, or any other fees that are required to be paid that the VA doesn't allow the borrower to pay. And then again, they have this thing where you choose, these are or are not included in closing costs. So don't get confused by that, because basically if it's a VA insured loan, the VA borrower is not allowed to pay them. And it's just broadcasting to the seller that if you have made a contribution to the buyer's closing costs, for example, on the page 1, if you're making a monetary contribution to the buyer's closing costs, there still may be additional fees that might exceed that contribution that you're required to pay. The other thing that they changed is under the paragraph about public water and sewer. This has always been in there that as required by the VA, the buyer and seller agree that if public water or public sewer is available, and if it is required by the local authority to be connected to the house, then the seller agrees to pay the cost of that connection as long as that cost does not exceed X amount of dollars, and the buyer and the seller negotiate that amount. The new verbiage that GAR added to the 2018 exhibit adds one more sentence to that, and that says, if the cost, in other words, the cost to connect to public water or sewer, required by the VA and the local authority requires it. So then it says, if that cost exceeds this amount and the seller is unwilling to pay extra cost, this agreement shall terminate upon the seller giving notice to the buyer that the seller is unwilling to pay that extra cost, and the buyer shall be entitled to a refund of the buyer's earnest money. Otherwise, if the seller is required to connect to public water or sewer at a cost agreed by the seller shall provide the buyer at or before closing with certification from the proper authority that the property is connected to and serviced by the public system. So again, the new verbiage GAR added this year is that termination right by the seller if the cost exceeds that amount negotiated, and the refund of the earnest money to the buyer. So again, those are the changes to the financing contingency exhibits. And again, it's kind of a continuation of changes that definitely will impact your lender. So thank you so much for watching. Dana Sparks, broker of Maximum One Greater Atlanta Realtors, satisfying your needs with service, innovation, and education.